uh, India realized that you need to have a solution that
Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me is Shail Bhatnagar, our markets editor. Well, bears seem to be on back foot amid positive global cues. But where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to rise on Friday as strong global tailwinds boost local sentiment on the Lal Street. Pent-up demand for quality stocks may result in a gap up on the Nifty. Bears seem seen on back foot as US 10-year yield dips and crude oil flattens. And bullish traders are likely to tweak their radars to search old favorites in the PSU pack with defense, railway, metals, fertilizer, and banking themes coming back in action on the long side. Very good morning, Shell. It's Friday finally. And bears were on back foot yesterday. The fog is kind of moving away. Sensex ended 489 points higher yesterday, and Nifty also was up 144 points. And I think Nifty remains in a bounce mode at this point in time. So where do you see Nifty, and what should be the strategy for today?
Good morning, Tanya, and a very, very warm welcome to all the viewers who are joining us on different parts of the globe. We've seen a very, very strong traction coming in for the market as of yesterday, and the Nifty was up 144 points, about at 19,133. The Bank Nifty adding about 300 points at about 43,000. And the good part, Tanya, is that there is a very, very strong tailwind that is coming for the second day in a row from US markets, as also across Asia. Now, as you know, we've been advocating that these dips have to be purchased. If you remember, mid last week we had discussed buying the SBI Nifty ETF and Bank Bs. That trade is working out fantastically well, and today is also going to be a good day as far as at least sentiment on Dalal Street is concerned. So you'll see a gap up opening on the Nifty anywhere between 50 to 80 points, and that gap up is likely to be sustained. So buy on dip trade is going to work wonders. Yesterday, if you remember, we had talked about the 19,200 Nifty call for next week's expiry. That's worked out phenomenally well, as also the put. So both sides of the trade made money yesterday, and that's how options have to be looked at. As far as Nifty is concerned, you will see a very, very strong support. Now fresh supports, Tanya, are coming in higher and higher as the Nifty moves up on the graph. So you'll see a very strong support now coming in at 19,000 and 19,100. Remember, Nifty closed at 133 yesterday, up about 150 points, 19,133 that is. So the trading range is moving up, the support levels are moving up as the Nifty moves in a narrow upward channel, and you will also see the resistance, which was at 19,100 earlier, now moving up at 19,200, 19,300. So 19,300 and 19,100 are the fresh trading zones as far as the Nifty is concerned, and those are likely to do pretty well. So a nice gap up. The buy on dip strategy is back as far as Nifty is concerned, and the best part, Tanya, is that everything is now quiet. US 10-year yield down for a third day in a row. Crude oil is quiet, gold is quiet. So these were problems for equities last week. These problems seem to have disappeared temporarily. Therefore, you see the bounce back, and at all dips, for those who are sensible in the long term, will be looking at the Nifty ETF by State Bank of India and the Bank Bs, both ETFs. Tanya.
Okay, absolutely. Levels are moving up 19,300 and 19,100. These are some important levels. Keep an eye out on these levels. But talking about Bank Nifty also, Shell, the trend there is also positive and index remains hemmed in by 200 DMA levels. But what are you looking on Bank Nifty today, and what are now important, fresh support and resistance levels?
So Tanya, the daily graph of the Nifty is presented for our viewers. You'll see the index closed exactly midway yesterday at about 14,017 points. A nice gap up that came in was sustained, and over a period of time, the Nifty continued to gather. The Bank Nifty continued to gather steam. This is right in front of you. Two bad days, which were Tuesday and Wednesday. A strong move coming in on Thursday, and most likely you will see this now continuing on its way up. So you will see again a gap up. The trend is positive for Bank Nifty, and that gap up is likely to be sustained, or you will see it flattening out. But you will see positivity coming in as far as the Bank Nifty is concerned. It will consolidate on the gains that it has made yesterday, and it is IndusInd Bank, which is the strongest stock within the Bank Nifty space, which you will see a lot of traction coming in only because of technical and optional parameters that I keep on checking. And PSU banks, Tanya, they will be the draw as far as traders are concerned on the long side. The trading range on the Bank Nifty is seen anywhere between 42,900 to 43,500. Tanya.
Okay, absolutely. Got that. 42,900 to 43,500. These are some important levels. Keep an eye out on these levels. But let's talk about F&O space as well, Shell. Lots happening there as well. So, future and option space, what are you looking at in that space today?
Tanya, like I mentioned in the commentary, it is going to be the PSU basket that is going to attract a lot of very strong traders on the long side. If you remember, yesterday you had discussed PFC and RECL with Ashish Chatramotha. Those trades continue to remain fairly strong. You'll see a lot of moves coming into PSU metals, PSU fertilizers, PSU banking space. So these are the 3 or 4 hot zones where traders who are aggressive will again buy back into dips that have been presented by the market. So PFC, REC, any dips towards there. Mid cap IT, Birla Soft, KPIT, all these stocks are likely to attract a lot of interest. Banks such as Canara Bank, PNB, Bank of Baroda, City Union Bank, Union Bank, all these are the ones which have traditionally been the favorite of traders and will again come back on the radar as far as the long side trade are concerned. But again, these are all technical parameters. These are all based on optional data. Should viewers be interested in taking a position on them, they have to consult an independent financial advisor. Tanya.
Okay, absolutely got that, Shell. And with that, it's now time for us to welcome our guest on the show today. We have with us Mr. Kiran Jani, who is the head of technical research at Janam Broking. Good morning, Mr. Jani. Always good to have you on BTTV. Starting with the technical market outlook only, how are you positioned on Nifty today? Because we are seeing that bulls are coming back into the action. So, what should be the strategy and what do the technical charts suggest?
Very good morning, everyone. So overall, if we are talking about the technical chart, I think we should have to look at the sentiments of the current market. Looking at the Fed policy, everyone were expecting a rate hike, but it won't happen. And they have clearly given a guidance that from December it is possible that we can see some rate hike. And in December there is a festival season, and next year we're going to have an election. So rate hike cycle it might not pick up whatever the market is expecting. So everything is priced in, and we are heading for the short-term bottom for sure. That is what the technical plus sentimental things are looking at. Now coming to the level-wise, looking at PCR ratio at 0.82, somewhere around a neutral zone. But in on technical chart, we can see that prices has made a short-term bottoms. We can see one more panic flow somewhere around 18,800 to 18,600, where 200 days DMA is live. This is the medium-term outlook. But whatever dips are coming below 18,800 would be the fresh buy position. Coming to the intraday point of view, there is a range of 19,200 to 19,000. Whatever dips are coming around 19,000, we should go buy. But if market giving us any gap up opportunity, somewhere around 19,250 to 19,300, we would like to book profit, and risky player can short sell. So for intraday point of view, 19,250 would be the resistance part. At that particular part, we would like to go short on Nifty for the target somewhere around, as we mentioned about the support, 19,000. And we want to keep a stop loss of 19,340. So for intraday position, for intraday things, we are giving a short call on Nifty. Similar way on Bank Nifty, we are seeing that 43,200 is that 200 days moving average, which is likely to be a resistance for the day. And we can also see, as per the option data, 43,200 call writers are holding more than 1 lakh quantity of short. So that's the clear indication that for today's 43,200 to 43,300 would be the supply zone for the Bank Nifty. We would like to go short somewhere around 43,300 for the target of 42,800. And in this case, our stop loss would be 43,640. So medium term, we would like to go buy on dips, but for short, for intraday position, for intraday, we would like to go short at current market.
Good morning, Mr. Jani, and welcome to Market Today on Business Today Television. A very warm welcome to you. Any stocks that you think merit a long side trade, or any overvalued zones within the F&O space which you think would react very well to put buying? Please elaborate.
Yeah, so two recommendations we are with us. First is the buy side. Here also, we would like to highlight some of the macro reason behind this peak. So Balrampur Chini, sugar stocks, we can see the sugar prices is trading at all-time high. Now the sugar harvesting is going on. So there are very good chances that sugar sector stock price, we can see some higher level. And based on the option data and the derivative data, Balrampur Chini looks very good. Long build up happens yesterday. We can see the very good price rise on price chart also. On daily chart, we can see the ascending triangle pattern retesting is successfully done. Now stock is trading above its 400 psychology resistance level. Yesterday closed somewhere around 420. So we would like to go long on Balrampur Chini for the target of 440, and we would like to keep a stop loss of 450. Another stock is the JSW Steel. So in JSW Steel, we would like to go short. As we have mentioned about the Fed policy and everything, the commodity prices start softening. And because of that, we are seeing that metal stocks are giving up in profit booking zone. They are trading to their falling channel. Also, they have breakdown their all important moving averages. Now, coming back to the JSW Steel clear-cut short built-up candidate. Yesterday, we have seen some relief rally, but it could not cross its 5 days high. With that, the stock price is also formed a bearish flag pattern on daily chart price. So looking all these things, we would like to go short on JSW Steel for the target of 715. And for that, we would like to keep a stop loss of 746. So JSW Steel is our short candidate, and Balrampur Chini is our buy candidate.
Right. Mr. Jani, what according to you is the strongest banking sector stock, whether even if it's in the PSU space or the private banking space? Where do you see, dips being purchased into, whether they are based on good, strong fundamentals or even technicals?
Pardon me, can you come again, sir?
Mr. Jani? Sir, I wanted to know your favorite banking stock on the long side, whether it is based on fundamentals or technical charts.
Okay, so coming to the banking sector, we are liking Kotak Bank. Reason being, Kotak Bank has given a price correction and time correction both. As of now, stock is trading below its all long-term moving averages. Fundamentals is no matter to look into the Kotak Bank. It's perfectly okay. All the fundamentals in this bank, from promoters to from all their financial statement. So I don't think so anyone can doubt on the fundamentals of the Kotak Bank. Now coming to the technical, we can see that prices is trading into the range since long time. So the time correction has been done. We can see that there is a long valuation gap between the small cap and mid cap. So there are chances if market make bottom this time, so there are very good chances that large cap stock can outperform the market. So with that psychology, and coming to the Kotak Bank daily chart, we can see 3 bar positive divergence or a bullish divergence on the momentum indicator. These are the very rare divergence, and whenever this kind of a divergence plotted by the price, we are easily seeing at least 8 to 10% kind of a rally on the stock. So on similar fashion, Kotak Bank has formed 3 bar divergence. Yesterday, we have seen that prices crosses is 20 days moving average. Again, momentum indicator from extreme oversold territory to neutral zone, a falling channel breakout on intraday charts, daily charts, it's supposed to happen. So Kotak Bank, we would like to go long at current market price 1734.35 is the closing rate. If any dips come around 1720, that is again a very good buy. We keep a very aggressive stop loss of 1690, and there are very good chances we can see a rally up till Diwali somewhere around 1800 plus. So Kotak Bank is our preferable stock in private bank.
Okay, so that's a good positional pick on the long side. You can't question the fundamentals on this particular counter, and the fact that the counter has done nothing over the last 3 years also should enthuse fundamental investors at this kind of a low. Welcoming Mayuresh Joshi, a very dear friend, to the discussion, and looking forward to his views on the market. Good morning, Mayuresh. Festive greetings and a very, very warm welcome. I'm sure you were at Wankhede last night, and you are really, really keen on sharing your bullish thoughts on the market after the kind of drubbing the Indian team gave to the Lankans. Welcome to the show. Your views first, and what are you looking at?
Morning, Shail sir. Morning, Tanya. And thank you so much for having me on your show in the first place. No, unfortunately, I was not in Wankhede. I was in Chennai, and I completely missed the match because there was a series of meetings out there. But yes, I think the bullish note for the Indian cricket team at the market probably continues. So to that extent, I think what is really transpired in terms of data points from the Powell speech, obviously higher for longer is the base case now that the markets are probably bracing themselves for. But the data points that came in yesterday, the non-farm payrolls, private data points expected today, but they are also expected to be a little bit on the softer side, reflected a sharp drop in yields in the last 4 to 5 days. So that's a big respite for the North American markets in general. And even European markets are probably rejoicing, along with the Asian counterparts, the data points that are probably coming through. Having said that, in our own context, the RBI governor is looking pretty enthused as far as the Q2 GDP print is concerned, and obviously looking at how GST collections are, how direct tax collections have been. The macro trends probably look intact for India. And therefore, I think the kind of enthusiasm that might get reflected in the second half as well, Q3 full of festivities, discretionary spending expected at the fullest, is expected to also prop up corporate earnings growth, which have held up very, very well from a micro standpoint. So both from a macros and a micro perspective, India probably stands out, which might also be the scenario as we head into the second half. So yeah, I think in a bull market, as we've always seen in the past as well, you see the sharp correction. There might still be volatility around. There is a Hezbollah statement which is expected at 1 o'clock. What happens because of that? And the state elections might have some rub-off effect in terms of volatility as far as equity markets are concerned. But they should take that in their stride, because markets ultimately probably look at both macros and micros, which are seemingly looking very, very good for India as we speak at this juncture.
Undoubtedly, I think we continue to remain in that Goldilocks phase as far as numbers are concerned. You can look at Tata Motors, you can look at the kind of numbers. The GST income has come in about 1,72,000 crore rupees for the month of October. Very, very strong traction coming in. Yes, the Nifty and the Bank Nifty have this habit of moving 5-7% either way, but those are daily moves, and one should take them with a pinch of salt. Mayuresh, Tata Motors first. It's one of those fabulous outperformers for 2023, and the numbers now buttress the faith that long-term investors have put into this business. What do you think of their earnings? Where is the stock headed? And apart from Tata Motors, what looks good to you?
So yes, I think a brilliant set of numbers as far as Tata Motors is concerned. So the The commentary also was very, very supportive. So the management expects JLR margins to head even higher as we move into the second half in the next financial year, which is a huge positive for the stock in general. Obviously, I think the points which lagged the overall numbers growth is the China story. But as the China story resumes, say next 2 3 quarters, as one of the biggest markets for Tata Motors outside the Americas, the consolidated numbers will be even better if you probably look at the next 2 years. The kind of platform launches on the Jaguar suite that is expected in the next 1.5 2 years are going to be phenomenal. And the Indian domestic launches itself have been very well received. The MHCV segment holding up, though very small portion of the EBIT contribution. And therefore, fabulous set of numbers. The stock has done phenomenally well. I think with the numbers in perspective and expectations of how the next couple of years, 3 years might look forward to, I think the stock might continue its northward journey, Shell.
Absolutely, Mayuresh. And since we are talking about auto space only, let's talk about Maruti as well, because Maruti has also reported total production at 1.76 lakh units in October this year. That is up around 13% over 1.56 lakh units in the same month last year. So, what are your thoughts on Maruti, and where is the stock headed according to you?
Good morning, Tanya. I think that remains on our buy watch list, as I mentioned last time as well, last time around as well. I think two factors. One, again, the kind of launches that are expected are going to be a key driver for not just Maruti, for the auto sector as a whole. And a whole host of launches are expected across its peers as well, including the likes of M&M and Tata Motors, as we spoke. The second element in terms of footfalls and the alignment that is happening specifically towards the SUV market, I think that is phenomenal on two counts. One, I think the product mix with the margins that SUVs deliver for OEMs are far better than entry-level vehicles, which aid a lot of these auto companies itself. And the second aspect in terms of input cost pressure, semiconductor issues are now largely behind us. Yes, we have been hearing, I was hearing the Kalyani Steel management where input costs have gone higher. They are renegotiating with the OEMs as well. So some hike in prices is not ruled out. But that's not going to deter the kind of order backlog that these companies already have in the footfalls expected as new launches start coming with the next few quarters as well. Balance sheet seemingly looks has always been very, very strong, and then there'll be no issues as far as corporate governance is concerned. So I think this is one stock that probably remains on our buy watch list as far as market is.
Okay. Shifting gears, Mayuresh, as you've also mentioned that sentiment has improved for the better on Dalal Street. How do you see November panning out? How do you see your interactions with the buyers as also high net worth individuals, ultra HNIs, foreign funds? What are they talking about? What is the granularity of the sentiment on Dalal Street?
So, Shell said two aspects. One, you obviously, and all of us have heard the news in terms of Abu Dhabi expecting to pump in around $50 billion as far as the Indian markets are concerned. I've been speaking to a lot of the foreign counterparts as far as our institutional investors are concerned. They have a very, very bullish view on India. And there is a huge wall of money that is expected to come in. I think two aspects here. One, a large element of that money will come in a staggered manner in the next few quarters. As the general elections come to an end, and if it's a favorable outcome that the markets are probably looking at, you can probably see a tsunami of money probably coming in as per the feel and the pulse that you're probably getting from foreign investors as well. On the domestic count, investors are continuing to remain extremely bullish on the entire India story per se. And this India story will continue for the next few years, the few decades that we're probably going to see a tremendous amount of growth coming through. So there is no doubts in my mind how investors are viewing this market. Can there be volatility as far as November is concerned? Absolutely, yes. I think slew of events again, what happens geopolitically, what happens to crude, what happens in terms of the build up to the state elections that we probably got in the month of December. And a large part of hedge funds, because we are almost at the year end, I think there will be bouts of profit booking in November and December because Indian markets are the only markets for foreign funds and hedge funds that have given tremendous amount of money in other markets which have probably lagged quite significantly. So some element of profit booking not ruled out, but I think the domestic flows will probably make up for it.
Okay, ladies and gentlemen, I need you to tighten your seat belts and get ready for pre-open trade. Remember, we are looking at a gap up after a sustained gain yesterday when the Nifty shut shop at 19,133. I can't even begin to tell you the strong rally, Tanya. I just hope this is true, but it won't be. 300 points higher on the Nifty, we'll let it settle. But like I mentioned, they're going to take the bears to the cleaners as far as short covering is concerned. Very, very nice moves coming in, 19,400 on the Nifty. We'll let this settle. I don't want to raise hopes, but definitely a gap up and a very strong gap up that we are looking at the end of the week. The Friday is going to end with very, very strong positivities, and the aggression that you saw on Wankhede Stadium's pitch yesterday is getting translated on Dalal Street. As you would know, both Wankhede and the Bombay Stock Exchange are fairly close to each other. But 169 points, a gap up of 19,300 is what you see on the Nifty. These are sensible prices. Let me now just elaborate on some of them. HDFC Bank, 0.8% higher, 1483. I want to see what Reliance is doing, 2329, 0.38% higher. I also want to see what Tata Motors is doing. I'm sure it's going to react very, very aggressively to earnings. 3.7% higher, 660. Remember, this is going to be a fresh record high for the counter. Let's again come back to index heavyweights. Private sector banks, ICICI Bank and Axis are in the green, 0.5% and 1% higher. Kiran's favorite today, Kotak Bank, 0.5% higher, 1746. Tanya, all 10 stocks as far as index heavyweights are concerned are in the green. Let's look at SBI, 1% higher, 577.45. So it's going to be a very, very strong gap up. Let's see what happens after that. My presumption is that it will flatten out but retain the gap. Okay, one very, very quick look at primary markets, and then we'll go one very quick look at the F&O markets, and then we'll go to Kiran on his picks as far as markets are concerned. Tata Motors, it's going to be a fantastic day, 3.7% higher in F&O, 660. Gujarat Gas, 9% higher, 448. IEX post earnings, 1.9% higher, 129. Some moves on the positive side coming on Petronet LNG, 199, 2% higher. Let's also look at Apollo Hospitals, 2.3% higher at 5,000. These are F&O stocks. One very, very quick look at NSE 500. Okay, post earnings, Suzlon, 5% higher, 34.25. JK Lakshmi Cement, 4.5% higher post earnings, 705. It's going to be a very, very good day for bulls today. Kiran, coming to you, your first comments on how do you see pre-open?
So pre-open is very strong, definitely, but you have to look at that how market is sustaining at higher level. As we discussed, as we seen last day also and discussed today morning also, for Bank Nifty, 43,200 is there, 200 days DMA. So it's not that easy to cross. Number one. Number two, 43,200 holding a higher number of a call writing also. So there are very good chances that we can see Bank Nifty gap up somewhere around 43,200 to 43,300. But don't chase this gap up. At least wait for 1 hour. If market is sustained above 43,200, then we can see further rally. Otherwise, profit booking can come at that level. So I would like to remain cautious on that particular level for first hour. Similar way, on Nifty chart, we can see 19,250 to 19,300 was the earlier support. Now it's become a resistance also. So here also you can see on option data chart that 19,200, 19,300 is a higher number of call writers available there. So that might be some supply zone. So I would again say some cautiousness for first hour. Don't chase this gap up. Stock specific bullishness is there. So I think you should chase stocks rather than the index at current level.
Fair point, and a very, very sensible, practical outlook on index trading. Wait for the first 1 hour for two reasons. One, we have a gap up as of now. We have to see whether it is going to sustain, and this gap up comes after yesterday's rally of 133 points on the Nifty and about 300 points respectively on the Bank Nifty. So all kudos to you, Kiran, for this view for our investors and traders. Coming to Mayuresh, very, very strong earnings being announced by mid-cap IT, Mayuresh, Birlasoft and KPIT in particular. Would you hold a view on both of these?
So anybody holding shares should hold on because the momentum clearly stays with mid-cap IT companies. Birlasoft in particular, you look at the EBIT margin trend improving year on year, quarter on quarter. The expectations in terms of dollar revenue growth is expected to be in double digits, higher double digits. Same for KPIT. They've actually increased their constant currency guidance to 37 odd percent, increased their EBIT on the higher end of the range that they're probably looking at. Both these companies are staying on very, very good order books as we speak. And the common trend that is probably happening within these companies, obviously KPIT is an ER&D company where flows will keep on coming as far as orders are concerned. But generally, I think the order wins between $1 million, $5 million, $10 million are holding intact. So even if we see a soft landing happening in the US, the discretionary spending towards these bucket sizes might very well continue. And management commentaries, therefore, are hinting that they're not seeing any price related or demand related action as far as orders and execution is concerned. So, yeah, I think the stocks have run up, but the momentum can continue. So, anybody holding to these stocks can definitely continue.
Okay, momentum can continue. That's the word coming in. But coming to you, Mr. Johnny, for Birlasoft and KPIT only, the mid-cap IT pack, and especially few companies, they have been reporting good second quarter numbers. So what are your thoughts on Birlasoft and KPIT Tech?
So both the stock from Nifty Midcap has been outperforming since long time. We can see that Birlasoft is trading into the rising channel, height of higher bottom, trading on above all its important moving average. Recently, we have seen a minor correction from 530 to somewhere around 480. From there, again, stock has started trading into the rising channel. It has given a multiple breakout, like up and handle pattern breakout, or maybe you can say a flag and pole pattern breakout is also there. So looking at the positional chart, we are seeing the price target somewhere around 630 to 650. So in case any dips come around 550, 540, would like to go long again. And we also advise hold these stocks with the stop loss of 520 for the target of 620, 650 for the Birlasoft. Now coming to the KPI technology, here also we are seeing that fresh breakout from ascending triangle pattern. Stock were into the time correction zone since June 2023 to till now. Now stock has comfortably crossed its resistance zone somewhere which was at 1200. Now stock is trading above 1200. The momentum indicators also are into the bullish zone. So again on KPIT, same take. If any dips come around 1200, we would like to go long. In case of dip, we would like to keep a stop loss somewhere around 1160. And looking at current chart, if we are okay to hold for 1 or 2 months, we are definitely looking for the target of 1500 on KPIT. So both stock very good chart pattern, very strong chart pattern for the bullish run for upcoming time. If dip comes or at current market price, we would like to go long.
Okay, absolutely got that. And what about Maruti, Mr. Johnny? We were discussing that stock with Mayuresh earlier. And stellar auto sales numbers and 13% margins. What do the technical charts suggest for this counter?
So before commentary on Maruti, I would like to comment on Nifty Auto. If you check Nifty Auto chart, there is a fairly double top pattern placed on daily chart. The index is trading below its 20 and 50 days moving average also. So we are a bit cautious on auto sector, honestly speaking. And now coming to the Maruti chart, it is also trading at this near support. So we don't recommend for buying at current market price. If any dips come around 10,000 level or maybe 9,900 level, there is a very fair point or fair value to buy at 100 days moving average support also. So at current market price, we won't suggest to go long. And let's wait for some price correction somewhere around 9,900 at least. We can like to go long at that price, and for that we want to like keep a stop loss somewhere around 9,800. So at current market price, we would like to slightly avoid Maruti and let's price correction to happen.
Okay, absolutely got that. And let's shift our focus to some of the FMCG stocks. And coming to you, Mayuresh, first for Colgate, because it's among the few FMCG stocks that are trading at record highs. So, what are your thoughts on Colgate?
So gaining market share, I think at least maintaining their market share as far as the toothpaste and the toothbrush market is concerned. Innovative products that they've introduced are gaining market share. They are increasing their retail footprint and the overall distribution network as far as the supply chain is concerned. And balance sheet has always remained strong, and valuations always have remained at the higher end. But the strong modes that Colgate have in their portfolio should get reflected in the price. So within the basket, Tanya, very frankly, I think Colgate, Tata Consumer, and Godrej Consumers, they reported very strong set of numbers, while muted commentary was observed from HUL, Nestle, Britannia, as far as rural discretionary spending is concerned.
Okay, absolutely. What about you, Mr. Jani? What are your thoughts on Colgate?
So Colgate, if we check daily price chart, the stock price is trading into the very bullish zone. Recently, we have again seen a trend correction zone since July month to till now. Now, prices is crossing its resistance somewhere around 2050. Now, stock price is trading at 2100. Again, here we can see prices is trading above its all important moving averages. Looking at monthly chart or weekly chart, it is trading on all-time high. So definitely very good candidate to add into the portfolio. Any dips come around 2100 or maybe 20,800, 2080 level, it would be the buy support as 20 DMA is also there. So definitely we would like to go long. If any dips come around 2100, keep a stop loss below 2050. And looking at current market price, if we are okay to hold for 2 to 3 months, we can definitely see prices somewhere around 2300 to 2400.
Okay, ladies and gentlemen, let's again pay attention to pre-open rates, which have now settled. So Nifty is opening with a gap up, 107 points higher, 19,241. So the bulls have 19,200 with them, as also a triple century on Bank Nifty. Virender Sehwag for you, 43,320. And this gap up has resulted in two things. The second intraday resistance of the Nifty is now with the bulls, which was at 19,235. So let's hope this gap up sustains. And as Kiran was suggesting, let's wait patiently for the first 1 hour to see whether this gap up remains with the bulls, and then take a positional view on the Nifty as far as the long or the short side trade is concerned. I'll just also mention some stocks which have doing smartly in the high beta space beyond the index heavyweights. You have Bombay Stock Exchange 1.3% higher, 1795. CSB Bank 1.2% higher, 328. You have Zomato 1.7% higher, 109. Mannapuram Finance a percent higher, 138.45. You have Policy Bazaar in the green, 704. Let's look at the PSU basket. Where do you see good gains coming in? Container Corporation of India, despite muted numbers, up 2.8%, 702. NBCC, an order win, 1.5% higher, 68.40. You have GMDC 1.2% higher, 328. Fairly strong moves coming in. So let's see how the markets settle. Kiran, based on pre-open trades in cash markets, anything that gets your attention on the long side or the short side?
Yes, looking at the cash stocks, there are very good bucket. We can see that it is moving ahead. See, as you mentioned about very good cash stocks also, but for us, the fertilizer stocks are doing very good. So RCF, we are keeping our eyes. RCF is looking very good at current market price. Trading above is all long-term moving averages, with prices has given a breakout of ascending triangle pattern and made a high somewhere around 145. Now from that price is again trading at that previous breakout level. So we can keep an eyes on RCF. If any dips comes somewhere around 125, 120, we would like to go long. Even at current market price, again, RCF is very good candidate to go long. We are looking at price target somewhere around 140 to 150. And with that point, if you want to keep a stop loss below 114. Another cash stock which we like is Dhampur Sugar. As we've given already bullish view on sugar sector, Dhampur Sugar is giving a gap up opening. Yesterday we have seen a reversal formation on daily chart. It's again a retesting of its previous breakout. A similar chart pattern which has we discussed for the RCF. Here also we can see a positional bullish divergence on momentum indicator. So Dhampur Sugar at current market price of, if any dips come, we would like to go long with the stop loss of 250. And looking at current market price, we can expect target
right, sir.
300.
So Dhampur, Balrampur, RCF and Kotak from Kiran Jani. Okay, ladies and gentlemen, tighten your seat belts. We are now at opening trades. The Nifty is opening 109 points higher, 19,245. Bank Nifty 300 points higher, 43,299. Let's look at Tata Motors first. This is going to be a blowout day for Tata Motors, 653.75. 2.72% higher. Tanya, all 10 index stocks are in the green as far as markets are concerned, and the index at the moment is battling R2, which is 19,235. Okay. Bit of a profit booking happening as far as options trade are concerned. 19,200 call is seeing some selling pressure. Okay, let's look at markets again. What is HDFC Bank doing? HDFC Bank is 0.5% higher, 1484. Reliance in the green, 0.3% higher, 2327. Infosys also in the green, 1% higher, 1385. How about the two banks? Axis Bank flat, 984. ICICI Bank up 1%, 928.45. Kotak mildly in the green, 1741. So it's Tata Motors in the index heavyweight, which is moving fairly rapidly, 3% higher, 655. A nice sea of green is what I see on my screen. BHEL taking it away. Good strength coming in, 1.5% higher, 129. Yesterday's pick, Tata Tech Mahindra doing 1% higher at 1134. Fairly strong traction coming in. Let's look at the FNO space minus the index heavyweights and see what traders are looking for in terms of gains. Post earnings, JK Lakshmi Cement 5% higher, 709. Container Corporation muted earnings, doesn't matter, 5% higher, 760.95. Suzlon 3.5% higher, 33.90. Tata Motors 3% higher, 656. These are all earnings boys doing phenomenally well. Bombay Stock Exchange 1.9% higher, 1805. Strong moves coming in Adani Power and in Ratnamani Metals. Let's look at all-time highs. Tata Motors DVR, Credit Axis, Oberoi Realty, MCX and PFC. These are 5 stocks at all-time high. Let's look at the most active list, and good news, Tanya, is amongst the top 20 stocks which are on the most active list based on turnover, just one of them is in the red. That is IRFC, 2.5% lower, 71.40. So the overall momentum in the market is phenomenally good. Coming to you, Kiran. Bank Nifty gaining strength after the initial 2-3 minutes of profit booking on yesterday's trades. 19,250. Your initial thoughts in the market and anything that you like in the initial phase.
So I would like to highlight the gap up opening of 31st October and today's. On 31st October, when market opened with the gap, the open and high was same, 43,356 somewhere around, and from there we have seen the selling pressure. Whereas today we can see the open and low is same. Generally, this is the screen reading skill. When open and high remain same, market is into the pressure, and when open and low is same, market is in a very fair or a bullish zone. So today for the intraday, we have to consider the last 3 days high. It is 43,350. If market continues sustaining above 43,360, then there are very good chances we can see some this follow buying will come. Otherwise, there are chances that prices might see some supply zone over there. Even in morning commentary, we have given a same level. 43,300 would be the supply zone for today. So please keep an eye on that level. If that level crosses, then only we can go aggressive long. Otherwise, again, we are very cautious. You can see that PSU banks are not taking part of this rally. They are similarly flat level only. Even we can see that private banks, barring one or two bank, all are very flatter note. So if any pressure comes, we can see a sharp fall also. So keep an eye on 43,350 level. If it is not crossing on Bank Nifty, we can see some profit booking coming at later part of this day.
Okay, absolutely got that. And let's see what Titan is doing in today's trading session, because we have the results today and the company is expected to report strong revenue growth in the second quarter. But the net profit growth is expected to be muted because of the high base. Coming to you, Mr. Jani, first for Titan, what do the charts suggest for this counter ahead of the numbers?
So coming to the Titan daily chart, we can see that prices are into very much into the bullish zone. At looking at current daily price chart, prices has already taken a support at 3100. Now prices is trading at 3220. It has given a breakout from very steep falling channel, and there are very good chances we can see prices to head somewhere around 3300. So at current juncture, we would like to go long on Titan with a keeping a stop loss in mind of 3190. If 3190 is hold, then there are chances that we can see 3300 would be the target price we are seeing in next 15 to 20 days.
Okay, and what would you do with Titan, Mayuresh?
Uh, the numbers can be a mixed bag because, as you pointed out, the eyewear can be a little bit of a soft quarter. But the expectation in the next two quarters, Tanya, apart from this quarter where they've already given an update, Q3 is where festivities are. And the expectations in terms of the shift that we are expecting to see from the unorganized to the organized, 35-40% is the share of the organized players expected to go up to around 50-55 in the next few years because of all the measures taken, PAN disclosures about 2 lakhs, hallmarking, so on and so forth, should aid the kind of volumes that one looks at. The second element for Titan, which might work in its favor, is that they were lagging in the wedding jewelry segment. That has clearly improved as part of their product profile. And as the percentage of wedding jewelry along with the studded portion increases, they are high margin products which should aid the operating leverage as a contribution to these products increase on the balance sheet. Third, I think balance sheet has never been an issue for Titan. And even the watchwear part should continue doing well as urban spending and semi-urban spending gains significant amount of traction. So yeah, this also remains on our buy watch list. But anybody holding it should continue holding it. It's one hell of a portfolio strategy.
Absolutely. One of the best outperformers and multi-bagger returns over the last 20 years have come from Titan. Mayuresh, sticking with you, last time you were with us, you had mentioned JK Tires. The numbers were a blowout that came day before yesterday, the stock at a record high. 344, would you have a view?
Remain positive. So I think numbers, A, phenomenal. Two, for the industry as a whole, OEMs should continue showing significant amount of growth, and the replacement market should also be growing at a very, very decent clip. The third element in terms of the new tire profiles or products that they've probably introduced, green tires as they call it, and the applications thereof, should probably be a huge game changer. And because of their consistent kind of product mix that they've got and the segment mix as well, largely skewed towards MHCVs, which should continue doing well in my opinion, as infrastructure spending continues to gain momentum and last mile connectivity. This stock can continue doing well. Again, new launches on the PV, CV side and the two-wheeler side also should affect strong volume growth going forward. So yeah, I think remain optimistic.
Okay, let's now pay attention back to the Nifty. Tanya, at the moment 19250 is with the bulls. The first 5-7 minutes of trade have shown that there is some traction coming into the Nifty on the long side, up about 115. Let's look at the broader markets. The Nifty IT index is 281 points higher, 30,865. Let's look at how the sentiment is across the board. On the National Stock Exchange, 1500 shares are in the green compared with 350 in the red. So the advance decline ratio is definitely 5:1. Let's shift focus immediately to NSE 500. The index is 0.6% higher. 400 stocks are in the green, 100 in the red. Within the Nifty, there is an index called the Nifty Alpha 50. About 40 stocks out of 50 are in the red. Nifty Bank, all 12 are in the green. So very, very strong traction coming in. Nifty Pharma Index, 20 stocks it has, 19 are in the green. So it seems that the initial gap up, Tanya, is getting strength, but we'll wait for the first 15-16 minutes and see whether the Nifty option chain shows some kind of profit booking. Remember that it's Friday and people don't want to carry risk, especially on options trade over the weekend, because options prices typically get scrunched. The second 5-minute candle is still green. Let's see how it pans out, but overall the trend is positive across the market. This is how the structure is. Interestingly, let's look at Zomato. Very strong volumes, 3.5% higher, 111. Why I mention this is that it's the second top traded counter. Coming to you, Kiran, your view on Zomato.
Counter like Zomato, or we can see a restaurant counter, because of the festival season and World Cup fever, we are seeing a very good attraction on such kind of a counter. Coming to the Zomato chart, we can see a big rounding bottom pattern breakout came at earlier level, somewhere around 98, 99, and from there prices is keep going higher and higher. Now at current juncture, 111 price, we would like to go long, as all moving prices is trading it's above all moving averages, and on momentum indicator is also trading into the bullish zone. So there are very good chances we can see in upcoming days a target somewhere around 130, 140. So it's quite bullish bet, but for the long term perspective. So at current market price, definitely one can go long. Keep a stop loss, very aggressive stop loss of 105. And for the first initial days, we are looking target of 125, which is their IPO time consolidation zone. And once the prices is crossing 125 rupees level, then there are very good chances we can see a higher level also. So we are quite bullish on Zomato. If any dips come, we would like to go long. And for the short term, we are keeping a stop loss of 105.
Absolutely, and I think, Shell, we should look at Birlasoft. The stock is at record highs, and the company reported stellar set of numbers for the second quarter. It reported strong revenue growth at 5.7% on a YY basis and 3.1% on a quarter-on-quarter basis. And we'll be speaking with the management also in a while. But the outperformance continues when it comes to Birlasoft, Mayuresh.
Absolutely. I think we mentioned that the EBIT margins have shown a year-on-year and quarter-on-quarter improvement. So I think one of the few mid-cap IT companies where sequentially and an annualized basis, the EBIT margin improvement is there. The order book looks pretty decent as we speak at this juncture. And the exposure that they've got to both products and the geographies as well. As I mentioned as well, if a soft landing does come through because of the sheer size of products that they manage and the order wins, it doesn't seem, at least from management commentaries across the mid-cap IT spectrum, that pricing and demand probably remains an issue as we speak and as we head into the second half as well. So yeah, I think the positive enthusiasm continues for a whole host of these companies.
Absolutely, and I think the margins were up by 50 basis points, and this is despite the underlying impact of salary hikes for a month. So,
Yeah.
Mr. Johnny, coming to you again for Birlasoft, I mean, what are the fresh support and resistance levels for this counter?
So at current market price, prices keep trading into the height of higher bottom pattern only. So for short term, if we are looking at any price support, the price support is somewhere around 560, 62 level. So whoever is holding this price, this stock should have a stop loss below 560. And for fresh buying at current market price, definitely we can buy because it's trading above its last 2 days high. So at current market, we can go long in case if any dips come. So yesterday low would be the very good support somewhere around 570. So keep a stop loss of 560. The current market price we can go long. If any dip comes somewhere around 570, we can again like to go long. And for the target, as we discussed earlier, also 630 to 650.
Okay, one very good stock, at least on the charts and technically, and very bad press coverage at the moment is Vedanta. But in the green, 234.20, 1 lakh shares worth of block deals happening, and this is the immediate one. Before that and after that, so many of them. Kiran, your view technically on Vedanta?
So Vedanta prices has given a very sharp correction in some corporate news. Now from that news, stock has formed double bottom pattern. It has taken a support at 200 level, 210 level with reversal bullish candlesticks pattern, and the momentum indicator which was trading into the extreme oversold territory, now it is trading into the bullish territory. Stock has crossed this 20 and 50 days moving average, and it's also given a breakout from falling channel. So all these signs are giving us a gist that stock into the bullish zone now. There are chances that stock can retest its earlier resistance somewhere around 260. So looking at current market price, we would like to go long on Vedanta. 234, 233 would be the level to go long. Keep a stop loss below 228 for the target of 260. So very good setup. We would like to go long on Vedanta.
That's a
Okay.
fair bit of view coming in on Vedanta. What else is moving? One stock I'll just show you on the screen. We won't take a view because lots of volatility associated with it. Let's look at Vodafone Idea, up about at 1420, fairly strong moving coming in, and this stock at the moment is trading at its highest level since December of 2021. A lot of structural changes happening in terms of they are able to make payments, pending payments to the government as far as license fee and other normal costs are concerned, but we won't take a view. I'm just marking the stock in front of you because it's showing fantastic gains. Today's day belongs to Birla Soft, it seems, 589.90, and we'll have the management coming in today to discuss their fabulous quarterly performance at about 9:45. But at the moment, a record high on the counter and moving with very strong traction on the long side. About 5 lakh shares have already been traded so far. What else is moving? To you, Kiran, Biocon. Any view here?
So coming to the Biocon, if you check the daily chart, the stock is trading into the heart of higher bottom pattern, but it has given very fresh and steep corrections from its earlier high somewhere around 280 to stock has corrected to 220 level. Now here, due to stock price momentum indicator is trading into the extreme oversold territory, so it's a one kind of a dead cat bounce. So I would suggest we should avoid Biocon at current market price for any kind of a buy or a bottom fishing. But at current level, I would like to highlight two stocks, if you allow. One is Canfin Home and PEL.
Please go ahead, sir.
Yeah. So looking at PEL, we can see prices has crossed this 5 days high. Stock is trading into the very steep range of 980 to 970. Today, prices has given a very good breakout from this range, and there are very good chances that PEL can retest its level somewhere around 1010, 1020. So looking at risk reward ratio, we are favorable stock for intraday point of view. We can go long at current market price for target of 100, 110, 120. Keep a stop loss of 970. And another stock, as I discussed, it's Canteen Home. Similar chart pattern. The stock was trading somewhere around its all moving average cluster resistance. Today, prices is crossed its resistance 770, 772. Momentum indicator is also heading into the bullish territory. So PE and Canfin Home, both stock can be looked for the intraday trading perspective.
Okay, absolutely. And before we thank Mayuresh, just last question to you, because I think we haven't discussed Zomato with you, Mayuresh, and we have results today. The stock will be in focus, and Street is expecting strong revenue growth, driven by 28% growth in food delivery revenues, then 103% growth in pure revenues, and 205% growth in Blinkit revenues. And Street is also expecting higher contribution margin of 6.5%. What would be your thoughts on Zomato ahead of numbers, and any long-term view that you would like to share?
So just as a disclaimer, Tanya, I just ordered something from Blinkit in the morning, and since it's Diwali, they've given me a goodie. So the view will be with the biased. Jokes apart, I think the stock has done phenomenally well. Numbers have been pretty decent in the previous 2 quarters. The best part about the numbers is the management optimism in terms of the contraction of losses that you're seeing both in the Blinkit and the Hyperpure business. The Blinkit business expected to break even in the next 3 to 4 quarters. And if that probably happens, the console numbers should be even better as we head into the next few quarters. Now, if the numbers improve and the kind of price action that the stock has already displayed, is there a potential for stronger re-rating that the stock can probably do? The possibility and the probability stays on the higher side because the crux that probably remains, Tanya, is at what point of time will Blinkit and Hyperpure break even? If it happens before those 4 quarters, it is a high probability that the re-rating will still continue from the current levels. So yeah, I think the optimism probably continues for Zomato.
Okay, absolutely got that. And just one last view on Shriram Finance also, because I think Shell was also interested in this stock earlier. So, what's your thoughts? What are your thoughts on Shriram Finance, and where is the stock headed according to you? It's up around 1% as we speak. 1979 is the level where we are at this point in time.
So Tanya, correct me if I'm wrong. I think you spotted that last Friday at
Yes.
pre-open we spoke, and numbers have been phenomenal. So I think the corporate governance is top notch. It comes from a pedigree of high stakeholders as far as the family holding is concerned. And the third element in terms of the core business itself, the expectations in terms of numbers delivery is expected to continue at a very, very good pace, both within the South markets, the non-South markets, as they expand further in the next few quarters, as digitalization takes place, the amount of cost optimization that happens on the balance sheet, and obviously the product mix along with the collection efficiencies that they probably have. Valuations, again, might be on the higher side considering the pedigree for all these factors that the stock possesses. But I think the good times might continue for Shriram.
Okay, absolutely. And on that note, thank you so much, Mayuresh, for taking the time on and being with us here on BTT.
Thank you so much. Pleasure's always mine.
Okay, coming to you, Mr. Jani now. Any stocks that are on your radar at this point in time? Any stocks that you have, that are on your list?
Yes, so we have already discussed PEL and Canfin Home. One more stock I would like to highlight, that is the Sun Pharma. We are seeing since last 3 days Sun Pharma is trading into the heart of higher bottom pattern. Even today, the prices is crossed this 5 days high. With that, prices is above its 20 and 50 days moving average, which was resistance since yesterday. Again, with that on intraday charts, it has given a breakout from the rounding bottom. So multiple pattern breakout we are seeing on Sun Pharma also. And if in last session, in second half, as we discussed, we are expecting a profit booking. If such thing happen, then Sun Pharma would be as a defensive bet. One should look into that. So 1144 is the current market price. If any dips come around 1133, 1130, again it's a buy or accumulation kind of a zone. Keep a strict stop loss around 1110. There are very good chance that we are looking target for 1170, 1180.
And what are the charts suggesting for Gujarat Gas? Shell also pointed out in the pre-open also. And the company posted good set of numbers, 37% YY growth in its profit. And margins are also on a healthier side. This time around, 421 is the level where we are at. And Street is clearly liking the numbers. What do the charts suggest, Mr. Chan?
So Gujarat Gas has given a price correction worth of 25% almost from 520 or 30 odds to 400 kind of level. Now prices is above its 400 level, number one. Number two, the prices is crossed this 20 days moving average with today's gap up. Prices has formed multiple doji candlesticks pattern at bottom level with positive divergence. So there are chances that we can definitely say that prices has made a short-term bottom. So any dips around 410, 415 would be the buy. At current market price, I would little bit cautious as price were into the very sharp correction mode. So at current market price, I would like to say wait and watch. If any dips come around 415, I would like to go long somewhere around that price point. And at current chart, we can easily expect 440, 445. So looking at risk reward ratio, wait for some price correction, 415, 410, buy at that zone. Keep a stop loss of 400 for the target of 440.
Okay, ladies and gentlemen, let's look at some other parts of the market which are buzzing with the gains based on earnings. Let's look at JK Lakshmi Cement. Remember, Whenever Gaurang Shah comes in and we talk about the cement space, he speaks very eloquently about JK Lakshmi Cement. Today, it's the top volume buzzer. 713 in front of you post earnings. The counters jumped over its 200 DMA with a gap up, and about 10 lakh 91,000 shares of JK Lakshmi Cement have been traded, which are about 4.7 times its 5-day average. Lal Pathlab, strong earnings, 5% higher, 2,610 in front of you. We are in the first 10-15 minutes of trade, and already 1.6 times 5-day average volume has been had. Strong moves coming in on Container Corporation of India. 1.5x volume, 14 lakh shares have been added. Remember, Container Corporation did not declare earnings which were to the benefit of the market, but such is the enthusiasm for the stock. And Kiran, I'd like to take your view on Container Corporation of India. At about 710 rupees, the counter is up 4.5%. What do you think? What are the charts telling you?
Container Corp or Concor is trading into the falling channel. Today we can see the gap up opening and a breakout from that particular channel. One more thing, we can see that prices has given a breakout from up and handle pattern earlier. Then prices has touched its 740 level. So again, prices going into the same territory. Prices has a support of its rising channel also, and momentum indicator has formed bullish divergence on intraday basis. So looking at level wise, if prices hold its 700 level, then there are chances that the prices keep moving in higher top, higher bottom pattern only. So keep a stop loss of 700 very strict, and for the target price of 740, 750.
Fair point.
Okay, absolutely.
As far
Got
as the
that.
Container Corporation is concerned.
Actually, I
Tanya,
wanted to ask
let's just look
about
at other stocks
MRPL
that are doing
Shell.
fantastically well.
Yeah. If you see the
Yeah, Tanya,
MRPL
go ahead.
stock shell, the company has actually posted 1,059 odd crore profit, and this is against a net loss of 1,789 crore on a yearly basis. So, Mr. Johnny, coming to MRPL, I mean the stock is the top gainer from the small cap space. What do the technical charts suggest now at these levels? 113 is the level where we are at.
So MRPL has given a very fantastic rally in last year from 38 to we have seen a rally of 125. Since then, prices into the price correction plus time correction. Now again, stock price is above its psychology of resistance of 100 rupees. Currently, prices has formed this ascending triangle pattern, and the breakout level is 100 rupees. Prices have retested twicely, and after the result, we can see that prices has moving in higher top, higher bottom pattern, and momentum indicator is also on bullish zone. So at current market price, definitely one can go long for the target of 140 and keep a stop loss in mind of 100 rupees.
Okay. With that, we'll pause a bit and shift gears to the corporate section of Market Today. Welcoming Mr. Guha, MD and CEO of Birla Soft. Good morning, Mr. Guha, and it's a pleasure to host you, sir. The earnings have been fantastic for Birla Soft. The stock has beaten all its mid-cap peers in terms of how it has performed at a record high. Welcome to Market Today and on Business Today Television. Share with us how do you see the next 2 or 3 quarters as far as Birla Soft is concerned, and the granularity of the mid-cap IT space, sir.
Yeah, thank you. Thank you for having me on the show. So look, I mean, we had a good quarter, and this is back on the back of 2 earlier good quarters as well. So if you look at 4Q of last year, 1Q of this year, as well as the 2Q, I mean, all 3 quarters we've upped our earnings as well as upped our profitability. Both revenue and profitability has seen a growth. So I think overall it's been a good run, but Q3 is going to be a muted quarter, only because the nature of Q3 is very different. It's a short quarter with furloughs, etc. So I expect Q3 to be muted, but I think Q4 we will be back on growth.
Okay. Mr. Guha, where do you see the maximum demand for your business coming in? Any particular geography that has outshone its peers in the previous quarter compared with 3 months ago or a year ago? And which is the sector which is giving you the maximum traction or the maximum visibility in the quarters ahead?
See, look, the Americas contribute almost to 86% of our business, right? As I'm sure you have noted. And the Americas continue to grow for us. We will definitely be focused in Europe as well as in Asia. We are hiring a new CEO for the rest of the world business. But we will be focused on some select countries in the other geographies to deliver a lot of growth. While we will continue to be focused in America for growth, but we want to kind of diversify our growth going into the other geographies as well. Now, as far as businesses are concerned, our digital business has been growing far ahead of the industry average, and we are pretty proud of that. We are investing in our data business, and you will see the data business also getting back to growth soon. Our ERP business is doing well. Our infra business has also turned around and is showing some growth. From a markets perspective, as in the vertical standpoint, manufacturing has done very well. BFSI has done very well. But we are also bullish on healthcare. Healthcare has shown a little bit of slowness in the past couple of quarters, but I think going forward, you will see the healthcare business also turning around.
Okay, absolutely. Good morning, sir. This is Tanya joining in the conversation. And I want to know it from you that what are your clients telling you? What's the demand situation at this point in time? Because if you see the situation in the US, that is still bleak. So are your customers cautious at this point in time? And if yes, then how do you plan to tackle these headwinds going forward?
So good morning, Tanya. And that's a great question because from our clients' perspective, the things are not very rosy going forward, right? I mean, there is a lot of uncertainty in the market. There is volatility, and our clients are facing that volatility. But look, as far as we are concerned, we'll be focused on execution. We'll be focused on working and serving our clients well. And as our clients go through the transformation journey, we will participate in that transformation journey. So, from that standpoint, I'm feeling more and more comfortable and confident as we go forward. But the situation in the market is obviously very volatile, and we'll have to take one quarter at a time. So, hard for me to comment on the future, but we'll be focused on one quarter at a time, Tanya.
Okay, absolutely. And talking about
Right.
the margins were
Uh,
up around 50 basis points, sir, in the September quarter. This is despite the underlying impact of salary hikes. So I want to understand from you that what's the outlook when it comes to, margin guidance going forward for FY24?
Yeah. So, Tanya, look, I mean, if you really think about it, our margins have gone up, and we've taken 1 month of salary impact because, as you would recall, we've given our salary hike starting the 1st of September, right? So, 1 month impact was baked in. Now, going forward into the October, November, December quarter, we will have impact of another 2 months from a like-to-like basis. And plus, on top of it, in Q3, we will have furloughs and it is a shorter quarter. So we see a little bit of a muted performance both on margins as well as on revenue in Q3. But we are committed to exit 4Q with 16% EBITDA. And that is what we have committed, and that is what we are working towards.
Right. Mr. Guha, let's get into the nitty gritties of your performance. There is a decrease in attrition. There is an increase in the workforce. There is increase in the margin, and the top line and the bottom line have been fantastic. Now tell us, how are you different from the pain that we are seeing in large cap IT? The entire mid cap IT space is in a kind of zone which is probably not getting reflected in the large cap space. What are you guys doing differently that the bigger ones can't make sense out of?
So, Shalendra, look, I can only talk about Birlasoft in terms of what we are doing. Look, first of all, you must appreciate that we are a much smaller business than the large companies. Large companies have billions of dollars of exposure to financial services. Our exposure to financial services is very, very small, roughly give or take about 130, 140 million. So from that perspective, we feel the pain a little lesser than the large companies because financial services obviously is an area of a lot of headwind at this point in time. Similarly, if you look at healthcare, our business is very small, roughly about 150, 160 million. So from that perspective, we are a little bit shielded from the macroeconomic when it comes to the large companies. But that said, I think we've done a good job in execution. We are focused on our clients' transformation journey, like I spoke about a little earlier. And our job will be to continue to work with our customers as they, go through this economic turmoil, if you will, and stay close to our customers and serve them well. So that's really our game plan. Our top 10 clients, as well as our top 20 clients, have grown faster than the company average as well as industry average.
Right. Mr. Guha, I was coming to your top 10 slot, but please accept my very warm congratulations on your modesty when you say you are small at 5,000 crore rupees in terms of top line. You are not small at all, but you are extremely modest. Let's come to the top 10 guys. Now tell us how has revenue from top 10 and top 5 especially moved year on year?
Yeah. So Shailendra, our top 10 clients have grown about 9% quarter on quarter, but our top 20 clients have grown about 3.5% quarter on quarter. So both these buckets have grown above company average. Now, top five clients have seen a little bit of moderation, but I'm not so concerned about that because it's a nature of our business. Some clients do well some quarter, some clients don't do well some quarter. But overall, I'm very confident that our top 20 relationship for the year will do better than the company average. And like I said, if we are focused on execution, if we work with our clients to help them through the economic turmoil and serve our clients well, over a longer term period, we will build a very strong, profitable, and growth oriented business.
Absolutely. And we also hope for the same, sir. But talking about the deal wins, you have mentioned that the company has signed deals of total contract value of $271 million, which included new deal wins of $167 million as well. So, if you could elaborate on that, if you could tell us more about these deal wins and your outlook going forward.
Yeah, so Tanya, we had a good quarter when it came to signings. Like you've noted, we delivered about $271 million of TCV, and that was aided by one large deal of about $100 million plus. But it's an existing client, but we've got new work from the existing client, and that is a testimony of the way we serve our clients. Over the last 9 months, if you look at our signings, they have been 21% growth over the previous 9 months. So it's a good indication of the way we are being called to the table, and the customers are trusting us to do good work with them. Now, going forward, again, it is hard to say in terms of how the signings will look like. Our pipeline is improving, which is the good news. We will have to work with our clients to see how much can we sign. But Tanya, you must also appreciate that the volatility still continues in the market. So we'll have to wait and watch to see how this thing pans out over the next couple of quarters or so.
Okay. Mr. Guha, you're already at about 5,000 crore in terms of turnover. And if you look at how the money has moved over the last 5-7 years, it's been a very, very strong traction as far as the top line is concerned. Any holistic visions that you have? Birlasoft will be $1 billion company in the next 3 years or so. When would you possibly hit that kind of a run rate, $1 billion a year?
Yeah, so Shailendra, again, a very tough question. I'm sure you realize that the economic situation is so volatile. It is hard for me to commit even 2 quarters out, let alone 1 quarter out. which is why, we will be focused on every quarter as it comes. Of course, we have an aspiration to get to $1 billion. Now, when will that happen? I can't really comment on it. My job and my team's job is to focus and serve our clients every quarter and take it one quarter at a time, Shailendra.
Okay, we'll let you go on that one. But Mr. Guha, the other thing I wanted to understand from you is that are there any new geographies, new verticals within the business that you are tracking or trying to set up which might add productively to your top line over the next 1 year or so?
So we are focusing on on four verticals that we are very clear on. In fact, we have sharpened our focus. We want to work with just the four verticals, which is manufacturing, healthcare, financial services, and energy utilities. And like I said, from a geography perspective, we want to expand our business outside the United States of America. And we are hiring a new CEO for the rest of the world who will be based out of London and will be focused on the European and the Asian markets. Now, in these markets, we'll select markets that we'll be focused on, like the United Kingdom, Switzerland, the Nordics, India. So we'll be picking our markets and we'll be focusing on that markets.
Okay. Mr. Guha, we've seen turmoil last 2 years over Europe because of the Russian-Ukraine conflict. If you could just share some thoughts on how Europe has come back on your radar, and now we have the Middle East crisis right in front of us, geopolitically a very big pain emerging in West Asia. Are you by any chance afflicted by these two problems?
No, we are not, because we are not focused on those markets at all, Shailendra. So, like I said, the markets outside the United States are small for us, and we've picked our markets to focus on. So, we'll focus on the United Kingdom, we'll focus on India, we'll be focused on Switzerland, the Nordics geographies, etc. So, the two, stuff that you spoke about, we are not affected by that.
Like I said, Lady Luck is smiling and working very strongly for mid-cap IT, and of course, Birla Soft has been one of the blowout performers. Mr. Guha, any plans to, reward shareholders apart from the fantastic returns that Birla Soft has already given on the stock price side? Any bonuses or stock splits in the works?
Again, that's for the board to decide. I can't really comment on that. As you would have noticed that we have given a dividend in our second quarter results. We've announced that. But going forward, any other corporate action is really for the board to decide. I can't comment on that, Shailendra.
Okay, Mr. Guha, we seem to have, both Tanya and I, exhausted our set of questions for you. Is there anything you would like to add that we may have missed?
No, I mean, look, like I keep saying all the time, that, we have to serve our customers well, keep our heads down, and just focus on execution. If we do that, I think we will be good. The market is volatile, the headwinds are real, and the market will continue to be soft. So we'll have to just go through that pain before the market turns for the positive. But our jobs are really cut out to serve our customers well.
Mr. Guha, we'll leave you at that. And again, our best wishes and congratulations to what has been a stellar quarter, both year on year as well as quarter on quarter. And here's wishing you very quick $1 billion worth of revenue in the very short term. And of course, the blowout performance that Birla Soft has given on the Lal Street. Thank you for sparing time for us, sir.
Thank you, Tanya. Thank you, Shailendra.
Absolutely. Now
with that,
coming
ladies
back
and
to the
gentlemen,
markets, Shail.
both.
And I was saying, Shail, that bulls are in a
Tanya, over to you. What have you watched?
Yeah. So I was saying that, last Friday also, we were talking about this mood that it always happens that bulls are always in a Friday mood on Fridays. So today also, we are seeing good action. coming on the last street, 19,251 on Nifty,
Yeah.
a century for Nifty, I would say. A triple century for Nifty Bank, as you pointed earlier as well, 43,321. So clearly, Shell, it's going to be a good day for Indian markets today.
Let's hope, Tanya, that the first hour of trade, bulls are able to retain 19,250,
Yeah.
19,200, and then you'll see, bears sort of backtracking for the remaining part of the week. The strategy that we highlighted to buy the SBI Nifty ETF 3 days ago, 4 days ago, when markets were in a serious downdrift at about 18,850, and the Bank Nifty was also languishing. So Bank Bs was suggested, seems to be working very well. Remember, whenever the Nifty is anywhere between 5 and 7% lower from its all-time most recent peak, this strategy works wonders over the 1 month period. Buy this in dips and reap rewards in less than 2.5 months. Nifty, Tanya, at the moment is up 4.5%, 5% year to date in 2023. By December, you just might see a better smile on the Lal Street. But with that, we'll call it a day. But remain glued onto Business Today Television for all your financial news needs. From Tanya and I and our team, thank you so much for watching.
So far as the Reserve Bank is concerned, we have identified high inflation as a major risk to macroeconomic stability and sustainable growth. Accordingly, our monetary policy remains resolutely focused on aligning inflation to the 4% target on a durable basis.
My colleagues and I remain squarely focused on our dual mandate to promote maximum